Good strategy. We have with us in Hong Kong Enzio von Pfeil, CEO at economicclock.com. Enzio, good to have you with us. First of all, we had RBA in Australia keeping rates on hold, sounding a bit of optimism about the global economy, particularly China. But on the other hand, we have the Japanese yen rising on risk aversion. What are the chances that these green shoots, is there potential for these green shoots to turn to black roots in the third quarter?
I think they've been pretty black all along, or perhaps I've become rather colorblind. What I mean by that is that the unemployment keeps rising, and it has to keep rising just because there, according to the economic clock, we have an excess supply of goods, which is only going to intensify. So in our view, the economic time has to worsen, and so these green shoots will morph into black shoots very, very badly, culminating probably in an October crash.
October crash, that's pretty severe. Joining us now also for market panelist strategy, we have Anko Belschneider, Senior Portfolio Manager at MainFirst Bank. Anko, you heard what Enzio just said. He's expecting October market crash. He's expecting also green shoots to turn to black shoots in the third quarter. What's your feeling on where the markets are headed?
That sounds very dark here. I would say the green roots probably get a little bit more brownish, and a crash, I think that's in the short term quite difficult to see, because the main problem is a lot of investors are still not in the market, are still very defensively positioned. So the key problem is who should sell for a crash? Where should the main disappointment be? I think that's the key element going forward. If the sentiment was very, very bullish and markets would rally even more ahead, yes, I could see this. I think that investors more and more are aware that the green roots will turn a bit brownish, and it's not a V-shaped recovery, should not result in a crash according to our view.
Okay, we're just going to take a pause there because President Obama is about to speak in Moscow, and Enzio, I definitely want to pick up on this October crash theory. So if you can we'll just hold on a sec. There we are. We're just waiting for Mr. Obama. We're going to go to that now? Okay, we'll just wait for him. And Enzio, can I just pick up on your October crash theory very quickly? That's quite a statement. Why?
Yes. Stupid as it sounds, this is because this is normally when crashes occur in October. I cannot tell you why. Most people cannot tell you. Secondly, though, I think that what will become very, very apparent by then is that the so-called global recovery just is not going to happen. The governments have run out of ammunition. They cannot keep on stimulating the economies, on top of which you will find that China itself will be running out of ammunition. It never was that pillar of world growth. It cannot be. Forget India. It's not going to happen. So what you're going to find is that also, as a third point, all of these big proprietary trading desks, having made money off the run up in the market, now will decide it's time to push the markets down and go short. So those are the three confluencing factors that I believe will lead to a crash.
It's quite strong stuff, Anko. I mean, can you envisage that scenario, Anko?
I think it's very interesting the different point of views that we hear. If you look at the Asian perspective, European perspective, I think the sentiment and the mood is much more cautious here in Europe. If you also look at the relative performance of especially emerging markets and Asian markets, they're back to all-time highs again. We've seen very strong rallies there. The sentiment is quite more muted here in continental Europe. Interesting was the Financial Times Germany publication yesterday, which showed that investors here on continental Europe, they are 73% bullish on Asian equities, less so on European equities, and even 25% is bearish on European equities. So if you see a crash, probably from an emerging market perspective, I could underwrite that, at least a relative underperformance, as there's no bears left on emerging markets. I can really understand that then you have a scenario where you could see disappointments, and I think the arguments given and disappointments will start. And if you really have only bullish or neutral market participants in emerging markets, especially in Asia, you're really apt to a strong correction, certainly relative versus more developed markets like Europe and the US.
Yeah, Enzio, it's Scott Wapner in the U.S. A strong correction and a crash are two entirely different things. I don't think my colleagues and I can let you off the hook that easy, I suppose, with calling for an October crash, and one of the reasons being, well, that's generally when crashes happen in October. I think we'd like a little bit more from you on why you think it's going to be the difference between a correction and a crash.
And a crash. Good question. Oh dear, what perception there. My reason is because I think that the growth expectations by that time will completely have bottomed out. In other words, they will just lose any floorboards that they've had, and people will finally accept that the unemployment rates have to keep rising, that the productivity will keep falling globally, and that in turn is going to make the earnings expectations fall through the floor, not go through the roof. So one is the earnings expectations very strongly being downgraded because you have rising unemployment, that excess supply of goods in our economic clock just coming through worse and worse and worse. On top of which, you cannot discount these days, contrary to my days doing this kind of stuff, you cannot discount the power of proprietary trading books at major trading houses that have made a lot of money off the bull run that we've seen since March of this year. They will be now circling the wagons for something else to make money off, and the only thing that's going to be out there is to have major short positions on.
Okay, it looks as though, well, I thought President Obama was going to step to the lectern there and begin a speech, but perhaps that's taking another second. Ross, I'm hesitant for a second to jump into another question here if it looks like the President is going to step to the podium in a second, but it's just interesting to hear from Enzio on these predictions of an October crash for certain. Do you have any thoughts on that?
Actually, if Enzio is still there, because I'll just interrupt him if the President turns up. Enzio, Anko made the point, he could see it perhaps happening in Asian markets because, you know, we've had a run-up. We haven't had such a big run-up over in, say, in Europe. So are you saying globally, or are you just saying within the Asian markets that you cover?
No, I think it's going to start in the U.S. I think that the U.S. is still the single determinant. I've never have been a buyer, having lived in America too many years, I've never been a buyer of this view that the world is decoupling. If anything, the Asian crash will be much less muted than in Europe. I don't think that the argument, at least I wouldn't accept it at this, you know, just sort of off the cuff basically, that the Europe and the U.S. will fall less just because they've risen less. In fact, if anything, I think if the growth prospects are worse, they have to be worse in Europe and the U.S. because guess what? The fiscal positions in those economies are so much worse than out here in Asia. So they have to raise taxes, for instance.
Anko?
Yes? I mean, the fact there has been a decoupling, if you look from a performance point of view. I think for the first time since a very long time, if at all, Asian markets or emerging markets are trading to a valuation premium to developed markets. And indeed, if you look at financial positions, they are a bit stronger, but they are emerging markets, so they're much more volatile and much more cyclical. And I think that is more than priced in, and very comparable to what you see, for example, in Europe, that risky assets and small caps, emerging market plays, that these were the assets performing rather well, not only in the upturn in the last 3 months, but also the last 5 to 10 years. And I think that could be more a topic that in the second half of the year you would see a switch from investors more towards defensives, blue chips and quality stocks. If you look at the valuation of quality stocks, the Roches, Novartis, Hennes & Maurits of this world, they're on decennia valuation lows versus the market as a whole. So if you are getting more skeptical, and indeed numbers will disappoint, which I can really see maybe happening in the third and fourth quarter, probably investors will shift back into more, let's say, quality assets, meaning developed markets, and especially within markets, more defensive sectors and quality stocks. It's difficult to see a decoupling, but factually we have seen a decoupling if you look at the performance of the underlying markets, especially emerging markets and high-risk assets versus developed market and lower-risk assets.
Okay, Anko, thanks for that. Anko Schneider, Senior Portfolio Manager at Main First Bank. Enzio, thank you as well for your thought-provoking, always good to hear from you, Enzio. Thank you very much. Enzio von Pfeil, CEO of Economic Clock.